Every day, the news is filled with negative returns on the back of these volatile markets. One manager, however, has managed to outperform the market. Today, I speak with Tim Samway from Hyperion Asset Management about finding value in these markets. Thank you for your time today, Tim.
My pleasure.
Tim, both your funds, the Australian Growth Companies Fund and the Australian Small Companies Fund, both outperformed the market. How did you find value in these markets?
Christine, it's surprising that there was so much value in the market this year. I mean, as you know, the index was down substantially. But last year, late in 2008 financial year, a lot of the consumer discretionary stocks had been sold off quite substantially. And we saw an opportunity in the market to buy some of those companies, JB Hi-Fi, the Reject Shop, Cochlear. We saw them looking quite cheap, and we thought this was a terrific opportunity to buy. So a number of those companies went up quite substantially during the year, some of them as much as 70% over the financial year.
Now, Tim, your Small Companies Fund outperformed the benchmark by over 40%. Are small companies better placed to outperform these markets?
We invest in quality businesses, and as such, we don't see so much of a distinction between small caps and large caps. We see that quality businesses have substantial advantages over low-quality businesses in times like this. That is, they have low need for finance because they've got strong balance sheets, and they often have strong competitive advantages that they can grow from.
Tim, what makes a good company?
For us, the key factor, I think, is a business that has a strong balance sheet. We've been investing this way for a long time, and every now and then strong balance sheets go out of favour in favour of those businesses that are geared up and growing very quickly. But we think over the long term that a sound balance sheet is a good starting point. We also think high return on equity, good level of sales growth, and we look for businesses that are really easy to understand. We think that we don't want to spend too much time trying to understand a business if it's just too complicated, because we're investing other people's money in it.
Now, you adopt a growth style investment approach. Is this style more suited to these volatile markets?
A lot of managers have struggled in this current year, especially in the growth area, because a lot of people played the momentum game, and resources really haven't done that well. The major mining companies have actually gone down during the financial year, while, as I noted, a number of the consumer discretionary companies and the healthcare companies have moved on quite substantially into positive. Having said that, we think that in these difficult times, that businesses that can grow organically, that is, businesses that can roll out a store program rather than just rely on the same consumer coming back the next year, are bound to win in these sort of conditions.
How important is it to stick to your knitting, so to speak, particularly when markets perform against your portfolio?
I'd have to say it was very difficult last year. We underperformed in the second half of the financial year last year, and that's when a lot of the companies that we owned went down, and we stuck to the fundamentals, and we bought those companies at that time because we believed in it, and we felt we'd be rewarded over the next 5 years. As it turned out, a good proportion of that reward came in immediately, and that's why we performed so well last year. Having said that, we still think there's plenty of opportunities in those companies going forward.
Do you think investors can learn from this long-term approach?
Look, I think they can, but we exploit investors' short-term views. We think that provides a terrific opportunity. So while I'd love to be altruistic and have investors learn and take a long-term view, that's a wonderful opportunity for us to exploit when people sell really good companies down because they panic out of them.
Now, they often speak about passion when it comes to investment markets. What exactly does passion mean in the investment world?
Christine, finding really good quality investments, and there are not that many of them in the Australian market, is hard work. We reject 95% of the companies we look at. And the passion comes in staying motivated to actually keep going to achieve the result that we're looking for our investors. We get a real buzz out of finding a jewel company that then goes on to perform really well. It's a real exciting buzz.
Thanks, Tim, for your time today.
It's my pleasure, Christine.